Hi friends, my name is Amandeep Singh and I'm a CPA at Cloudiverse CPAs. With the explosion of Bitcoins, Ether, and whatever other cryptocurrencies in the market, the cryptocurrencies have captured the attention of Canadians. Even though the technology and the principles behind them are not always fully understood. Since the Canada Revenue Agency has only taken a position on cryptocurrency in the recent years, there may still be a lot of confusion for taxpayers like you. There are two myths which I find pervasive among the crypto community. Myth number one is that you do not need to pay taxes on Bitcoin gains either because tax legislation and Bitcoin trade classification in Canada is not yet settled, or because Bitcoin is anonymous and the CRA will never be able to figure out what holdings you have or how much you made, as they do not have enough staffing to track all blockchain transactions for all taxable events within a taxable year. Myth number two, you only need to pay taxes when you sell Bitcoin for Canadian dollars or any other government issued fiat currency, because this is the only taxable event. Well, let me tell you that if you have been trading in Bitcoins and other cryptocurrencies over the last few years, every single time you traded, you were supposed to report the gains or loss on the transactions. I will answer some of the common questions on the trading of Bitcoins. Question number one, how to determine whether the gain or loss on the disposal of the cryptocurrency is either on account of income or capital. Well, if you are looking at your investments over the last few years and now want to report them because you've just been told that you must report, you need to ask yourself what kind of investments you have been making. Are you a trader running a business in crypto, or you were just holding the crypto as an investment? Now, in particular, the cryptocurrency could be inventory or property acquired as an adventure in the nature of trade, and any future gain or loss will be on account of income. Alternatively, the cryptocurrency may be a capital property, meaning that future gains or losses will be on account of capital. As no special rules have been set specifically for cryptocurrencies, the usual considerations for property transactions will apply. There are no hard and fast rules, but the factors that have been considered by the courts in deciding are: number one, frequency of transactions. Do you have a history of extensive buying and selling of Bitcoins? Number two, period of ownership. Are you holding the Bitcoins for a short period or a long period of time? That is more than a year. Number three, knowledge of Bitcoin markets. Do you have knowledge of or experience in the Bitcoin markets? Number four, relationship to the taxpayers. Do the Bitcoin transactions form a part of your ordinary business? Number five, time spent. Do you spend a substantial portion of your time studying the Bitcoin markets and investigating potential purchases? Number six, financing. Are your Bitcoin purchases financed by some form of debt? Number seven, advertising. Did you advertise or otherwise made it known that you are willing to purchase Bitcoin? Based on these factors, if trading in Bitcoins is your business, it gets treated as business income. That means 100% of your gain on transactions is taxed. Very recently, Bitcoin has been falling down a little bit. And if you do the math and you see that you got a loss, being a trader is beneficial, as loss gets treated as a business loss, which can be claimed 100%. Moreover, it can be set off against other sources of income. For example, if you have employment income and you are a trader and you had a loss, you can set it off against employment income to reduce your taxes. On the other hand, if your exchange of Bitcoins gets a capital treatment, only half of the capital gains are taxed. But if you have losses, a capital treatment means only half of the capital losses will actually be allowed. However, please bear in mind that you need to have capital gains somewhere else to offset your capital losses. Otherwise, if you're not able to do that, you will have to carry the capital losses to the future years to be set off against future capital gains. Question number 2. What if I sold my Bitcoin to buy another form of cryptocurrency, such as Ripple? And does it even count? Yes. CRA considers the trade of cryptocurrencies to be a barter transaction, and you will still need to report your gains when trading cryptocurrencies. You see, every trade, whether it involves fiat currency issued by the government or not, is a taxable event. For example, if you trade Bitcoin for Ripple, you have to pay tax as a taxable event has occurred. Now, of course, nowadays, there are a lot of places where you can spend Bitcoin, which is a far cry from how it used to be just a few years ago. So, if you purchased anything using cryptocurrency, the CRA's position is that you sold that cryptocurrency for its value in Canadian dollars at the time of the transaction. For example, spending Bitcoin, whether you're paying for booking a hotel on Expedia or even buying a luxury car like Lamborghini, it is treated just like selling. Question number 3. My computer earns Bitcoin from mining. Do I need to report that? Chances are that you hear the phrase Bitcoin mining and your mind begins to wander to the Western fantasy of pickaxes, dirt, and striking it rich. As it turns out, that analogy isn't too far off. Far less glamorous but equally uncertain. Bitcoin mining is performed by high-powered computers that solve complex computational math problems. The luck and work required by a network to solve one of these problems is equivalent of a miner striking gold in the ground. As a compensation, those who join a network to mine cryptocurrency as a business are paid in cryptocurrency. If you are a miner and got rewarded in Bitcoins, since cryptocurrency mining is considered as a business activity, you must record the fair market value of Bitcoin that day and mark that as an addition to your personal or business income. However, companies and individuals who mine cryptocurrency may be able to write off a portion of incurred business expenses that will help them reduce their taxes. Question number 4. My salary gets paid in Bitcoin. Do I need to report it as employment income? Well, while this scenario is rare, if you earn the Bitcoins in exchange for your services, you have to report that income on your tax returns. You can record your basis as the value of the item you received for it. If you own cryptocurrency, you should know that the Canada Revenue Agency has the owners of cryptocurrency in its sights because it is suspected that many cryptocurrency owners are not reporting or paying taxes on their cryptocurrency gains. If you take the risk of not reporting your crypto gains, well, you are sitting on a ticking time bomb and you will get hammered with CRA's penalties, interest, and back taxes, apart from paying hefty lawyer fees if you get criminally charged. To make sure you are not financially disadvantaging yourself with unwelcome tax surprise later, consult a chartered professional accountant to find out how to report your cryptocurrency gain on your income tax return. Thank you for watching this video. Please subscribe to my YouTube channel to watch more videos on tax planning and cash flow management. Have a good day.